So you have the down channel continuing. It's not why, I don't care why. It's, pretty much it's in the down channel, and until it breaks it and gets above it, then, it is what it is. If we kind of look at the weekly, you can see again, we have this line, basically it's 1600. Okay, we are at, excuse me, sorry about that. Where are we? 5-10% away from it, so we just have to be very, very careful. It's breaking back down below these previous highs. So we could pretty much look at this almost like a false breakout. Let me take some of this stuff out. Delete this drawing, delete it. And let's look at the weekly again. And you can see, yes, it's rolling back under. So we broke out, failed, broke out again, failed. We have the weekly distribution channel file with a bearish engulfing pattern, so we kind of have to see what happens and what happens tomorrow. That being said, it needs to get, if you're looking at this, it needs to get below this 1670 level. If we're looking at the SPY, it's pretty much that same thing, and then you can go back and start looking at previous gaps that it might fill and stuff like that. So, but it's closed below the 50, so that's something that give you, it's to draw some type of concern. If you look at the Dow, excuse me, you can see we pretty much have that same type of channel. So if I take this and kind of move this around a little bit, you can see that the channel is in place, and it's just continuing, quite honestly. So we just have to kind of see what goes on from here, but it's continuing to the downside. Could it test this level? Maybe. Let's look again. We see that we keep talking about the 2007 highs, and that's right here at this 14. What is this? The high of this, which is 14,200. So just keep that in the back of your mind. And like I said, it doesn't mean that it's going to go there. If you look at this is a monthly, so you do have an engulfing pattern plus a shooting star. We have to kind of see where this goes from here, and also remember these levels. And that's pretty much, it is what it is. I mean, there's nothing that we could do. We look at the composite, we can see that, this was the strongest of the bunch, but now it's giving a little bit of retracement, which is fine. And, it was the strongest of the bunch, except for the Russell, again, has the same thing. We go back to the composite, kind of see that it's starting to break a little bit, and you can kind of see that with a lot of names. So you have Apple. Apple's give you an engulfing pattern right now, engulfing pattern and a lower high. You can see that high here, lower high here. So is it going to roll? I'm not sure, but it's still, like I said, we didn't want to trade this funk for a while, because right now, if you look at it, you could kind of say this argument to say, okay, now we have some lower highs that are maybe can be breaking down. You got Google giving you a huge engulfing pattern right here. That's not a good sign regarding that. Now you have this angle right here. Let me and then we got to kind of look at the weekly as well, and you see we're coming right up to previous support. We got to see if it's going to hold. If it doesn't, it can roll, and it is what it is. Looking at some other names, let's look at Tesla. Tesla kept going down. I was actually in this trade, and this is something that you kind of have to really, I think, is a good lesson. First for risk management and one for money management. So the risk management is that I don't risk more than 1%. The money management is that, or it can be tied into the risk management, is that you don't want to put too much into. So yes, on the winning trades, so let's say you can only trade the right side of the chart, right? So from here, everything is gravy, right? So some people, I got stopped out the next day. On this day, I got stopped out. But some people might say, oh, it could come back, it could come back. Listen, once your stop goes, you can always get back in, but now you've incurred more than you had to. And that's the thing that, from here to here is another minus 4%. So instead of you just having something small, which could be from here to here, which is still 6%, but now you've made it that you've added another day on top of that. So now you're down 10% when you could have just, and it's all on your entry. So it's 10% if it was from here, the top of this to down, but of course it wasn't the top, and I was rolling and taking profits all the way up. So that's the lesson to kind of learn from. Listen, don't let your ego or say what I think is going to do. The chart broke and I was out, gone, didn't care. So you got to really kind of make sure that you're looking at that. I was looking at some other stuff. Starbucks. That one was continuing to look okayish. I was looking at CTCT. That one didn't break up. I was also looking at FLT. That one ended up going down. It didn't get me in, thank goodness. So you know, I was kind of happy with that, because sometimes they'll flash it up and then bring it all the way down, and you're just like, oh. But that's trading, like I said. So a couple of names that were looking good before. Celgene, you had Win, that still looks okayish. You had Ulta. This one actually did really well today, which was kind of really cool, or not cool, but you know, it is what it is. We're on that. You had Priceline that was doing well yesterday. That I would just be rolling up stops. Excuse me. You have Netflix engulfing, so it pretty much took all of this gains. Not saying it's time to short at all, but you know, maybe you're just waiting for another setup. You have Facebook. Facebook broke down more. I told you that I was looking. You look at the stuff from a couple of days ago. You know, I was saying on Monday, you know, or matter of fact, it wasn't Monday, maybe it was yesterday and the day before that, I would look for breaking above there and just keep it really tight. New Skin, that one kind of looks okayish. I would still be looking to get above here. Excuse me. You got Melly. Melly might be setting up for new, quite honestly, for new highs if it could get above these highs right here. So that's something that you really want to make sure that you're looking on your watch list. So you had CI that looked good going up here and broke down again. Hit your stops, you get out, and right now is not to try to revenge trade and stuff like that. And a lot of people do that because they just can't admit that, you know, at the end of the day, I'm wrong, versus they just keep going out. So a lot of darlings that now are looking like they're flagging to the downside. You have this, which was a great stock to move. And listen, you don't love any of these stocks at the end of the day. You got IBM. IBM continued to the downside, following through. So you got to be really careful with this stuff as well. We had that. Let me see what the banking sector did. Banking sector, you got engulfing, and you got another hammer coming. So I'm not looking to get long here right now, because it's just not a high probability trade for me. Bank of America, same thing. Excuse me, I actually just did Bank of America twice. This one could be breaking down. You got to see if it's going to break these lows right here. You got Wells Fargo giving you a little hammer, but this just a dead cat bounce to get back to the downside? Who knows? I think I did. Yep, I did Google about it. Let's look at Goldman Sachs. Goldman Sachs is might continue to the downside as well. So if it breaks this low, it could come back and at least test this 153 level. So you really have to be aware of that. Did I do LinkedIn? LinkedIn's giving you again another engulfing pattern to the downside, breaking the 10. I keep this as simple as possible. So I'm not trying to catch a falling knife, and I'm not trying to catch a step in front of a train. You got lumber liquidators. That one's giving you a little hammer action. I'm still not looking for that one as yet. I look for good setups. Jazz is still, you got some of the biotech names, BIB. Wow, look at that. I mean, like I said, roll your stops up and stuff that looks good, breaks down, and you just get out the way. You got same thing with this pharmaceutical company. You know, you got a couple of things that you just need to be right. BIB, yep. Rengen, yep. Let's see what Herbalife was doing. Same thing. You know, like I said, a gap down, and then it just continued and followed through. I mean, it's a bad day, and you just gotta kind of really make sure that you're looking at it that way. You have Away. Gave a huge candle up, but I still don't like the pattern. So at the end of the day, let's see if VRX, that one, again, I think we had that one already. We had, this was one that I was in a couple weeks ago. Wow, this one set up really good, and it's continuing to the upside. So just gotta, don't chase, and you kind of have to really see what's going on. Let's look at Chipotle Grill is kind of consolidating a little bit. Look at the weekly. You can see that one isn't that bad as well. But at the end of the day, all of these stocks, and I'm way over my time, are going to follow what the market does. And the market was down. So it's okay. And I put out a tweet today that, listen, it's okay to not trade. If you don't feel comfortable, don't trade. And if you want to wait for a setup and stuff like that, you just wait for your setup. So take care and trade them well. Or if not, watch the sidelines, see what the big boys are doing, and just ride the coattails. You don't have to be the first one that steps out the foxhole. Let the big guys do it.